and welcome. You're watching Market Cafe on ET Now and I am Snehi Shah. Now this is a show where we take you through all the important global stories that you need to be keeping on your radar and everything that's coming in from the global markets, right from equity to commodities, and we'll also look at the global handover. In the second half of the show, we'll go stock specific and we'll tell you about all the potential buzzers in today's trading session as well as what stocks brokerages are keeping on their radar. With that, let's kickstart the show then and let's take a look at the global handover coming in, and let's start with the US markets. Now, what was seen as a breather for US markets 2 days ago did not last long because Wall Street saw sharp cuts coming in last night. During the main trading session, the Dow fell 388 points of 1.1% in its worst day since the month of March. Now, the Dow closed below its 200-day moving average for the first time since May. The S&P 500 also declined 1.5%, closing below 4,300 for the first time since the 9th of June, while Nasdaq also slid 1.5%, close to 1.6%. These losses came after new home sales and consumer confidence data missed economists' estimates. Homes under contract came in at that 675,000 mark for the month of August versus what was estimated to come in at 695,000 according to data from the Census Bureau and the Department of Housing and Urban Development. Meanwhile, the Conference Board's Consumer Confidence Index declined to 103 in September from 108.7 in the month of August. Economists had forecasted this figure to come in at 105.5, but even though they had expected the figure to come in lower compared to the month of August, what has actually come has been lower than what was expected also. So that's what's primarily weighing in on these American markets. Amazon shares fell 4%, the most of the mega cap tech stocks, after the Federal Trade Commission filed an antitrust lawsuit saying the online retailer keeps prices artificially high, which is hurting its rivals. Important commentary coming in from JP Morgan Chase CEO Jamie Dimon as well, who's warned interest rates may need to rise further to tamp down inflation. The comments added to the bearish sentiment on the markets on Tuesday, and bank stocks have also declined on the back of these. Now, those moves would add to the market's losses for the month. The Nasdaq is down 7% for September. S&P 500 and Dow have lost more than 5% and 3% for the month respectively. Now, among the catalysts dragging stocks lower this month is the Fed Reserve's warning that they see fewer rate cuts next year. The news has pushed the benchmark 10-year Treasury yields to levels not since 2007. And also you've got negotiations happening in Washington because, if they do not negotiate on a bill, the Congress and the government would see a shutdown as early as the 1st of October if a spending bill is not agreed upon. So, not looking positive at all from the American market. In fact, sharp cuts coming in, lots of red across the Wall Street. Let's shift focus to Europe then, and Europe's markets have also fallen for the fourth straight session on Tuesday as negative sentiment has gripped global stocks. The Pan-European Stock 600 index has provisionally closed with a downtick of 0.6%, with most sectors in the red. Tech stocks have seen the largest decline, falling 2%, while autos have also fallen 1.2%. Now, Bank of England is showing signs, as well as European Central Bank, that it will hold rates steady, while the Fed may also have another hike, kept in mind. Now, the British pound and euro both have brushed 6-month lows against the US dollar. So, negative handover harsh coming in from both of those global markets, US as well as Europe.
Well, yes, absolutely, Snehi. Good morning. Negative handover, as well as you're seeing a bit of pressure on the dollar as well as on the 10-year bond yield. So, you're seeing across the board a largely negative macro coming through, and it's just deteriorating gradually over the day. And crude also has spiked up a wee bit, over the last day or so. We're seeing WTI above the $90 a barrel mark again, and we're seeing Brent nearly $94.5+ a barrel on Brent. So you're seeing, crude oil prices also moving slightly north again. And it's been flip-flopping between that $88 and $92 a barrel, especially for WTI. If I take that as the benchmark, it's been flip-flopping between that band. And it's largely, again, now the rise is largely on the back of the fact that while Russia has eased off on its oil export ban, but what also is being seen is that some specific crude products are still covered within the band. So you're still seeing some pricing pressure coming in over there, which is really aiding crude prices, and crude prices are therefore rising. But this flip-flop seems to be continuing, at least in the global marketplace. Let's quickly move on onto the dollar index. It's fascinating that crude is going up despite the dollar index creeping up, because that has an inverse relationship. So you're seeing the dollar index creep above that 106 mark, and that of course will continue to be aided by the US 10-year bond yield. So the US 10-year bond yield in turn has gone up above, it's still roughly above the 4.5 odd percent mark. It's at 4.52% as we speak, and that seems quite elevated as well, and with a possible rate hike that could continue to get pressured on the up rather than on the down, and which is why you're seeing some strength in building up in the dollar index as well, Snehi.
Absolutely, Harsh. Also, we've seen that gold is sliding down because dollar and the bond yield have been going up. So, well, that's what's happening on the gold front. But with that, let's also take a look at all the important cues that you should be keeping on your radar for today's trading session. And globally, you've got China industrial profits as well as USD crude oil inventories data coming today. So, keep an eye out for that. Back home for corporate action, you've got BSE. Now the buyback tender offer will close today for BSE, and you've also got the board of Canfin Homes that will meet to mull issuance of non-convertible debentures. When we speak about the primary markets, then you've got two IPOs that will close for subscription today, and you've got one that will open for subscription today. GSW Infrastructure as well as Updater Services are the two IPOs that will close. And on the other hand, you've got Valiant Laboratories. This IPO will open for subscription today. So keep an eye out for all of these cues.
Well, yes. So a negative global setup, largely. And one of the reasons for that is a second straight month of decline in consumer confidence in the United States, reflecting higher interest rates and flaring concerns around the political environment as well. Consumer confidence dipped to a 4-month low in September. Meanwhile, home sales plunged 8.7% after figures placed up to a 17-month high earlier this year.
And the Federal Trade Commission and 17 US states have sued Amazon, alleging the e-commerce giant is unlawfully dominating broad sections of online retail by inflating prices and overcharging sellers in a bid to stifle its competition.
Well, and placing the spotlight on the global gaming industry, world favorite game Candy Crush Saga has hit the $20 billion mark in revenue since its 2012 launch. Candy Crush has been the top grossing franchise in US app stores for the last 6 years.
And OpenAI, the creator of ChatGPT, in talks with investors about a potential share sale that would value the startup at $80 to $90 billion. Now, this is according to a Wall Street Journal report. As per sources, the company has begun pitching the deal to investors, citing a top-line target of $1 billion just this year and a gradual pickup from those levels in 2024.
Right, it's that time of the show where we slip into a short break, but right up on the other side, we'll take you through all that's happening in Asian markets. Right, welcome back. Let's quickly move on onto onto the news on the domestic front. The government has stuck to its borrowing plan for raising around 6.55 lakh crore in the second half of the financial year. Here's what we got from the Secretary of the Department of Economic Affairs, Ajay Seth.
This is being done for the first time, and in our interaction with the market, as all of you are aware, that we, along with RBI, we do interact with the market participants as to what their appetite is, what the need are, and there are several investors who are interested in long-term paper, longer than 40 years what Government of India was issuing. So this time that's how we have made a beginning with the 50-year paper. This is again an indication that a very strong confidence in the economy.
Well, that's the word coming in from the DEA secretary. But moving on, gaming company Delta Corp stock has plummeted in double digits after the company has received a tax notice for 16,000 crores. Meanwhile, unlisted gaming company Dream11, on the other hand, has received a tax notice from the Directorate General of GST Intelligence of about 25,000 crores. We spoke with Jay Saita, technology and gaming lawyer, on the implications of the issue within the gaming industry. Listen in to what he had to say.
See, On the prospective implementation, as I said, it is not clear how the user behavior will how this will be taken up. There is no consensus yet within the industry as well, on whether there will be a challenge at all, or this will be taken in and absorbed. So that is number one. On the prospective front, we'll have to wait and watch. Of course, if the retrospective matter does not succeed in favor of the gaming companies, then of course the future does not look good. And because these numbers and claims made by the department are manifold more than the revenue. So there is no way the gaming companies will be able to pay these demands, even if at all they fructify into demand claims later on. So the retrospective issue is very crucial. Prospective is something where we can cross the bridge when it comes. It is too early to say. Probably the industry will be able to absorb and weather this out.
Right, that's on the key piece with regard to Delta Corp and its possible impact going forward on the gaming companies as well as on the tax liability for the tax department. Quickly moving on, SEBI is considering the possibility of introducing the concept of fractional shares in India. ET now has learned from sources that the market regulator may soon hold consultation with the government on the issue. Ankur Mishra has more details on this one.
Yes, sources say that SEBI is likely to have a consultation with government on the issuance of fractional shares. Now, fractional shares is something which is not a complete share but a part of it. Remember, with the companies like MRF or Honeywell Automation, where the share price is so high, sometimes there is complaint by the retail investors particularly that they cannot think of buying a complete share, and hence owning a part of the share could solve their problem, and more participation of retail investors might be there. However, there are several considerations of SEBI on this issue, and we understand that those concerns will be presented to the government as it will impact listed companies, and even the current norms of SEBI Act as well as Companies Act do not permit issuance of fractional shares, and hence a wide consultation is needed on that. So if at all government agrees on the issues, these amendments will be made in the Companies Act as well as SEBI Act. Remember, in the markets like US, the issuance of fractional shares is allowed, but it needs to be seen that how far SEBI can go to present its case on issuance of fractional shares. And also let us clarify for our viewers, this is not even a first step for going towards fractional shares. This is just a discussion stage with government, and we need to wait and see what happens out of these discussions with government.
Well, thanks Ankur for all of those details. Let's shift focus then, because Singapore GRMs have dropped to $6.7 per barrel from that $9.3 per barrel mark, and it is at its lowest since the 19th of July. Now, how will it impact stocks like MRPL, BPCL, HPCL? All of these stocks will be in focus on the back of that, and Somit is joining in with the impact of that move on all of these stocks. Somit, take it away.
Well, all the Indian oil refiners like MRPL, Chennai Petroleum, Indian Oil Corporation, BPCL, HPCL and Reliance Industries would be in focus, given the fact that Singapore gross refining margin, which is the Asian benchmark for refining margin, have come down to around $6.7 per barrel as against yesterday's rate of around $9.3 per barrel. That's a sharp drop of around 28% compared to the previous closing. Now, the margins are lowest since July 19th, but if you compare it with the recent peak that we had seen a month back on August 28th of around $15.4 per barrel, the gross refining margins have come down by around 56%. Now, the reason behind this drop was that all the product prices were down on a sequential basis except for propane, and the reason behind that was the higher Chinese exports of refined products, and also because of the fact that Russia had eased the fuel export ban. Because of these two factors, the drop in gross refining margins could have happened overnight. Now, how does it impact the oil refiners in India? Now, generally, a $1 per barrel drop in the gross refining margin lowers MRPL's revenue potential by around 700 crore rupees annually. For Chennai Petro, it impacts their EPS or lowers their EPS by around 30%. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings potential by around 14 to 16% and for Reliance Industries on consolidated basis, it lowers their EPS estimates by around 4 to 5%. So keep an eye out for Indian refiners in trade given the fact that gross refining margins have slumped by around 27% compared to yesterday's close.
Seems to look like quite an impact, Somit, but let's quickly move on. Over 30 financial services providers are expected to list on the ONDC platform in the next 1 to 2 months. That's really the word coming in from ONDC MD and CEO T. Koshi. Listen in to his expansion plans and how he plans to roll this out. Listen in.
The good thing that is there is, I was just doing the other day an analysis to see from how many cities people have actually bought. Total in the last, we started going big way only in January of this year. It's about 7, 8 months time. Somebody from at least 620 cities have already bought and got it delivered. Okay. And on an average, every day I see somewhere between 150 to 300 cities, some orders happening.
They've seen more upsurge from ONDC. What percentage are they seeing the traffic going to through ONDC overall for mobility especially?
So like I said, now in Bangalore, it's like they've been there for a few months and they're seeing that that's only in auto. And I see that there's a significant percentage of about 100,000 plus transactions that happen every day.
Right now, as I understand, it's 100 people working in the ONDC team. As it grows, what kind of requirements would you need for ONDC to scale up further and really make it the big hit?
See, the ONDC to scale up, the power comes from the network participant. Today we have about 60, 70 of them. Probably by next year you will see another 10, maybe buying application today we have 10, 12 and that may become 15.
The financial services bit, people will be really interested because Grow, Zerodha, all of them have started their AMCs very recently. And if ONDC also has financial services, what categories will it be in? And
we expect to have, like I said, credit, insurance and investments and so on and so forth.
It's interesting to have financial services on ONDC also, insurance, etc. Any companies who have shown interest so far?
No, I said many of them, and in fact, at least some 30, 40 of them. I don't.
Both public and private.
Yeah, they are actually started doing the integration, and I don't want to be stealing their thunder and let them be ready. I don't know who's going to complete their integration.
Well, that's the word coming in from the MD and CEO of ONDC on the company's upscaling plans. But in the 8th edition of ET Now Infra Focus Awards, Nitin Gadkari, who's the Union Minister of Ministry of Road Transport and Highways, said the aim is to see India as the 3rd largest economy soon. He says to do that, the country needs to focus on infrastructure development. Listen in to what he had to say.
India is the fastest growing economy. Our number is 5th now. And we are expecting that in due course of time, our number will be the 3rd. The dream of our Prime Minister to make India an economy of $5 trillion. And for that reason, the most important thing the country needs, that is infrastructure development. And the water, power, transport and communication, without that, we will not get industry and capital investment. And without industry and capital investment, we cannot create employment potential. And without employment potential, we cannot eradicate the poverty. And that is very important. The most important thing which I feel related with the G20 is, which is related with my department, that is the G20 Alliance for Biofuel.
Right. I was going to ask this question too.
And that is to be a great achievement. Presently, we have the technology. We are making ethanol from sugarcane juice, molasses, B molasses, C molasses, ethanol from corn, ethanol from food grain, ethanol from rice, wheat. We are making ethanol from bamboo. And now in Panipat, we are making ethanol from rice straw, parali, popularly known as. And now the Indian Oil is going to start to make not only ethanol, but bio-bitumen. And at the same time, they are making now bio-aviation fuel. And as far as my information and my already consultation with the concerning people, I am confident that in due course of time, we will have a technology where we will convert carbon dioxide into ethanol. So I feel that
Please give a
That
big
is
hand.
to be a great thing for the country.
Moving on, sir, one of the prime program of your government is PM Gati Shakti. Now, if you could tell us about what exactly your ministry's involvement in the PM Gati Shakti.
आप देखो ये देश में आपने बहुत बार देखा कि एक तरफ रेलवे का पुल बन रहा है और एक तरफ रोड का ब्रिज बन रहा है. एक तरफ रोड की टनल बन रही, एक तरफ रेलवे की टनल बन रही. तो प्रॉब्लम ये है कि गवर्नमेंट, ये प्रधानमंत्री जी अक्सर कहते थे कि ये साइलो में चलती है. ये डिपार्टमेंट उस डिपार्टमेंट से बात नहीं करता, वो डिपार्टमेंट इस डिपार्टमेंट से बात नहीं करता, और दोनों ने मिलकर बात करने की मौका आएगी तो वो बोलता मैं अपना करूंगा, वो बोलता मैं अपना करूंगा. तो दैट इज टू बी वेरी कॉमन.
काफी सारे we have players here.
देखो सब ऐसा ही है. ये एक दूसरे के प्रति जो होता है वो ऐसे ही पढ़ाया गया है. तो वी नीड टू एस्टैब्लिश कोऑपरेशन, कोऑर्डिनेशन एंड कम्युनिकेशन बिटवीन द स्टेक होल्डर्स.
Right, let's quickly move on. We had Tata Steel actually buzzing yesterday on the back of a ratings upgrade. We also caught up with TV Narendran, who's the managing director at Tata Steel, on that ratings upgrade, and of course how the demand scenario is playing out, as well as their UK plant. Listening to a voice of that.
I think it's a reflection of the work that has been done. I think they appreciated the fact that the way we are allocating capital, and also the transition which is going on in Europe to address some of the legacy issues that we've been dealing with. So I think it's a good recognition of the efforts that the team has put in.
So H1 has been particularly difficult for companies considering inflation, interest rates, etc. What do you foresee for H2 of this year?
I expect H2 to be better than H1, certainly in India, because the demand continues to grow in India, and I think you see that in the auto sector, you see that in construction, in multiple sectors. Globally, things are still a bit weak because China is still struggling to come out of the post-COVID situation. Europe is also struggling a bit with high inflation. US has been more resilient. So globally, I think there's still a bit of fragility, but in India, things look good.
In India, things look good, but globally, there's a bit of fragility, as it were. So could you expand a bit more on prices, considering that, Europe, is not up to its full capacity in terms of growth? Same for China. The economy has been slowing post-COVID.
So I think there are two things which are impacting prices. One is the fact that input costs continue to go up. If you see, of course, oil has gone up, not directly impacting steel so much, but it impacts freight costs. If you look at iron ore, prices have been drifting up. Coal prices have been very strong. So that's going to have an impact on steel prices. So that's one pressure which you will see. The other side is more the demand side, which you see more in India, because Indian steel companies are not exporting much and they're able to sell all they produce in India. So we are driven more by the domestic demand-supply situation, which looks quite strong.
Right. So one final question before we let you go. What's the timeline for completing the Port Talbot plant of Tata Steel?
Well, there are, a lot of permissions that we need to get to transition to this new process route. Basically, we are looking at a 3-year kind of time frame to complete the whole process.
All right, that's the word coming from the top boss at Tata Steel. But with that, let's slip into a very short break, because on the other side, we'll come back to tell you what the FNO setup is looking for like today, and all the stocks that could be potential buzzers in today's trading session. So stay tuned. Hi there, welcome back, and thanks so much for staying tuned to ET. Now, this is Market Cafe. Now, it's that part of the show where we go stock specific, but before that, let's take a look at the FNO setup for today, and we're joined in the studio by Ansh to take you through just that. Good morning, Ansh. Now, Nifty is being very range bound, and we're not seeing major moves coming in. So, in a market like this, what is the FNO setup looking like?
Sure. So firstly, we'll start with Nifty first. As you can see on the chart as well, Nifty seems to have taken support around 19,650 level for third consecutive session. This is the level which we had been highlighting from last 2-3 sessions as well. So this cannot be seen as a stoppage or reversal in trend on upside yet, but at least bears are taking some rest here. So whether bulls will take advantage of this or not, only today's session can give us some idea about it. Now let's see what happened in FNO segment. Long unwinding was seen in Nifty futures with open interest dropping by 18%. This indicates that bulls are still struggling to rise. Whereas on option front, we saw good put writing at 19,600 strike, indicating that traders are expecting some base support here. Whereas on call side, some call writing was seen at 19,700, indicating resistance around this level. Now let's see what FIIs did. In index futures, they added 4,000 short contracts showing continuation of bearishness. This resulted in total FII short holding rising to 52%. So in a nutshell, FNO data continues to be bearish, with Nifty having some relief around 19,600 to 650 level. One can expect some positives here till these levels are protected on downside on closing basis. Also, mid-cap and small-cap are hovering around that 20 DMS support. So here some opportunity can be seen.
Right. Thanks for that, Ansh. Stick with us. Talk to us about all the stocks that we must keep on our radar for trade today.
Sure. So, Shyam Metalics will be the first stock in focus for today's trading session, as company has entered into energy storage sector by producing battery-grade aluminum foil, supporting India's self-reliance initiative in battery energy storage. Apart from this, 3i Infotech will also be in focus, as company has secured a contract of around 39 crore from Ujjivan Small Finance Bank for end-user supportive services. This contract will be valid for over 5 years. Infosys will also be in focus, as company collaborates with Microsoft to promote use of generative AI across industries. IndusInd Bank forms a multi-year global partnership with International Cricket Council to enhance an experience of customers, employees and cricket enthusiasts. Lastly, Board of Directors of Mahindra Finance will be meeting on 27th October to discuss financial results and raising of funds. So keep an eye on the stocks.
All right, Ansh, thanks so much for taking us through that. We will be keeping an eye out for all of these stocks in today's trading session. With that, let's also take a look at few management meets, because we've been getting notes from Macquarie that has the takeaways from the KIMS management meet. Meanwhile, Nuvama has also released the highlights from the Ultratech Cement management meet. Vamakshi is joining with us to take us through all of these highlights. Vamakshi, break down what these notes say.
Yes, let me first start off with KIMS. Now we do have the company interacting with analysts, and here are some of the important takeaways that came in from Macquarie. They have highlighted that the company has created a sustainable moat by building capacity at the lowest cost amongst its peers. In fact, the management believes that sustainable competitive advantage is in turn driving its return ratios. Growth strategy is focused on volumes rather than pricing, and in fact, they're also seeing some improvement in terms of profitability at some of its acquired hospitals. They are open to further M&A as well as innovative business models such as asset light as well as doctor equity participation. So largely those were important takeaways that came in from the management of KIMS. But moving on to Ultratech, Nuvama caught up with the management, and here are some of the important takeaways from that. The management believes that they will be able to post a double-digit growth in volumes in FY24. Volumes are expected to be better for Ultratech, definitely. They're expecting the demand to remain healthy, considering robust spending on infrastructure as well as the uptick that is now being seen in the housing cycle. The management is also quite confident of sustaining EBITDA per ton above the 1,000 rupee mark. In fact, not just that, they're also expecting another round of price hikes to come in October 2023. They do believe that there is a very good likelihood that the prices could increase in the southern region too. Price hikes could support profitability despite higher fuel costs. So largely those were all the important takeaways from Ultratech Cement as well as KIMS.
Right, Vamakshi, stick with us. Talk to us about what the other brokerages are talking about, any meaningful ones which you're really looking at.
Well, yes, let me first start off with Aditya Birla Capital. We have a note coming in from Jefferies. They believe that Aditya Birla Capital is poised to double profits in the next 3 years. They will be capitalizing on wider network as well as higher cross-sells. In fact, the NBFC can gain from MSME lending opportunities, what they have also highlighted. So all in all, what they're expecting is that over FY23 to FY26, they're expecting to see a 29% EPS CAGR, and this in turn could lift the return on equity to nearly 16%. In fact, in the life insurance segment, strong APE growth, better VNB margins due to scale gains could also drive a 26% VNB CAGR. The valuation also seems reasonable for this counter, which is why Jefferies has initiated coverage on this counter with a buy rating target price of 215 rupees per share. The next counter in focus is Metro Brands. We have a note coming in from Spark. The company is growing the core business with Metro as well as Mochi. They're also unlocking additional growth with Crocs. The return ratios are also looking quite robust, and in fact they're also expanding their store. They're also expanding their store network. So again, that is another factor that is working out in Metro Brands' favor, and that is the reason why Spark has initiated coverage on this counter with an ad rating. Moving on to the IT sector, Morgan Stanley has come out with a report, and they have highlighted that they see a very strong outlook for the FY25 revenue growth. Margins are improving, as well as double-digit EPS growth could keep the valuations afloat for these counters. Moving on, they also said that they have upgraded the Cient mainly owing to EPS upgrades led by resilient margins as well as low expectation on revenue growth. But on the other hand, they've gone ahead and downgraded Tech Mahindra as they see potential downside risk to the EPS. They maintain their overweight rating on HCL Tech, Infosys as well as LTI Mindtree. They maintain their underweight call on Wipro, Tata Elxsi as well as LTTS, while they maintain their equal weight call for Mphasis as well as TCS. So largely keep an eye out on all of these counters.
Right, thanks for that, Vamakshi. Let's also take it rather the focus will also be on the credit card industry with good solid spends coming through for a second consecutive month, 2.9% growth for the month of August versus the 2.7% month-on-month growth for the month of July. So a very healthy on a higher base, that's something to note. But let's quickly look at SBI Cards in specific. Month-on-month spends has gone up extremely well for SBI Cards, gone up 5.6% month-on-month. Spends for July as well as August have grown on a combined basis, have grown 11% over April. May, SBI Cards at a card level grew at 1.3% month-on-month. So a lot of the growth has come with regard to spends per card. That's what's really driving growth for them. Spends per card grew 4.2% month-on-month for August on the back of a good July quarter as well, 2.7% growth in the month of July by SBI Cards. Well, sector spends per card was at 1.1%. So when I compare that to the 5.6% that SBI Cards has grown at, it's certainly very healthy. My apologies, the spends per card for SBI Cards was 4.2%. So the spend per card for industry 1.1, SBI Card 4.2, quite healthy there. And in turn, let's look at some of the other players, the likes of an ICICI Bank, Kotak, IndusInd, yes, all of which have clocked strong growth, but of a slightly lower base. But SBI Cards in focus on the back of that.
Well, absolutely, SBI Card in focus on the back of that. Let's shift focus to big boy Reliance Industries, because the Abu Dhabi Investment Authority, that's the ADIA, is reportedly mulling a $600 million investment in the company's retail arm, that's Reliance Retail Ventures. Remember, the Gulf Fund is already an investor in Reliance Retail, having picked up a 1.2% stake in the month of October 2020. From the previous bunch of investors, the company's valuation currently stands at 60% premium to the last financing round 3 years ago, and this premium would value Reliance Retail Limited as high as $148 billion. Let's take a look at some of the other highlights of Reliance Retail as well. The market value is at $100 billion. It's the 12th largest global retail giant, and its FY23 revenue came in at 2.6 trillion rupees.
Right. So Reliance in focus as well. But with that, we're completely out of time on this edition of Market Cafe. Absolutely flat on the GIFT Nifty. That continues to be the indicator. Of course, the market will take the action forward. So stay tuned, and thanks so much for watching.